Hey guys, welcome back to Self Invested, where we talk about how you can do better with money. I'm just making a quick video to talk about the mortgage product that was launched by Accord Mortgages earlier this week. Now, Accord is an arm of Yorkshire Building Society, and earlier this week they announced that they're going to be launching their own 95% mortgage, but it's not going to be part of the mortgage guarantee. In this video, I'm going to speculate on why that might be, and I'm going to be talking about whether it's a good deal and whether we're likely to see any better interest rates from the products that are released under the mortgage guarantee scheme. The mortgage that's being offered by Accord Mortgages is a 95% mortgage with a 5-year fixed rate interest of 3.99% and a product fee of £995. If you're interested in this mortgage, you're going to need to go through a mortgage broker because you won't be able to apply for this mortgage directly with the lender. As I said at the start, this product is not being offered under the mortgage guarantee scheme, and the reason I think Accord have decided not to use the mortgage guarantee scheme is because they wanted to put some restrictions on the product, and if they had used the scheme they would have had to make it more open than they would have liked. So the restrictions that they put on the scheme, or the restrictions that they put on the product, is that it's only available to first-time buyers and it's only available on existing properties, so you can't use it for new build properties. And thirdly, it's only available for houses. You can't use it on flats. Now, I think the main reason that they chose not to go under the mortgage guarantee scheme is because they didn't want to offer this mortgage for new build properties and for flats, because I'm guessing that this is where they see most of the risk when it comes to a market crash or prices falling with properties. They think that the biggest risk lies with flats and new build properties, and I think that's quite a sensible move. Now, you'll probably ask, why would the lender not use the scheme if they could get a guarantee from the government for any losses that they incur? Well, this is because the government's only providing a guarantee for part of the mortgage. If the lender experiences major losses because a borrower defaults on a mortgage, it's only going to be the top 15% that they'll be able to recover from the government. Anything after that is going to be the lender's own loss. So I think Accord have decided that they don't want to take this risk and would rather offer their own 95% mortgage and only focus it on existing houses and offer it to first-time buyers. Accord did say, however, that they wouldn't have come out with their own 95% mortgage if the government didn't announce this mortgage guarantee scheme, because the mortgage guarantee scheme is bringing more lenders to the market with a 95% mortgage. And if they had come to the market with their own 95% mortgage without anyone else coming to the market, then there would have been just too much demand for them to handle. So the fact that the government have made this announcement that they're offering this new scheme, and there are other lenders that are coming to the market with 95% mortgages, has given Accord enough confidence that they could come to the market with their own product and won't be overwhelmed by demand. The next thing I'm going to look at is whether this is a good deal or not. And I'm going to do this by comparing it to 90% mortgages. Now, from a quick search online, the cheapest 5-year fixed rate 90% loan to value mortgage I can find was a mortgage product from Platform with an interest rate of 3.35%. Now, the product that's being offered by Accord Mortgages is only 0.64% more expensive than this product for a larger loan to value mortgage. Now, this makes me think that it's not very expensive based on the current market conditions. According to Which.com, 95% mortgages tend to be around 0.7 to 1% more expensive than 90% mortgages. Based on this, it doesn't seem like Accord's mortgage is that expensive, especially given the fact that there's many more 90% mortgages. There's a lot more competition in the 90% loan to value mortgages than there is with the 95% mortgages. This makes me think that the mortgage deal that Accord are offering is quite competitive. This also makes me think that when other lenders come out with their own mortgage products in April under the mortgage guarantee scheme, it's not likely that the mortgage rates for these products are going to be much lower. It's very likely that their mortgage rates are going to be very similar for their 5-year fixed rate mortgages. But what you might get with the mortgage guarantee scheme or lenders that are offering products under the mortgage guarantee scheme is that they have other shorter fixed rate periods and other variable rate mortgages which have lower interest rates, because the shorter a mortgage fixed rate interest rate is, and if it's a variable interest rate, it tends to be lower. So we may find that there are mortgage products under the mortgage guarantee scheme with a shorter fixed rate period that are cheaper. But for the 5-year fixed rate mortgages, it's very likely that they're going to be around the same percentage as the mortgage from Accord. It's also worth saying that interest rates for high loan to value mortgages are probably not going to come down until lenders have more confidence in the market. The more confidence that lenders have in the market, the lower rates will be for the higher loan to value mortgages. And if lenders aren't very confident about the market and the demand that there's going to be in the future, and the possibility of house prices falling in the future, they're going to price this into the interest rates that they offer. Anyway, that brings us to the end of the video. I hope you found it useful. It was just a quick ramble, but I wanted to do this because I know the 95% mortgage video that I did was really popular, and I thought this might be of interest to you. Anyway, make sure you give the video a like if you liked it, and leave a comment down below. And if you haven't subscribed already, subscribe to the channel. Take care. Bye.